Like we say every time on this channel, that no matter the direction of the market or the colors of the candlesticks, there are still opportunities in the financial market to make money. And that's why we are here, to show you how to make money in the financial market, even in a red market. Now, welcome to Clockwise. Now, the only thing we do here is to take you to the direction of where the money is in the stock market. And I don't do it alone. I have my analyst and a stock market researcher. I say he sleeps on the charts and he's always with the fundamentals of this company. Now, with a resounding virtual round of applause, welcome, Mr. Kandem. Welcome to Clockwise.
Thank you very much.
The market is still red as of today, yes. But I think we had a glimpse of hope yesterday. But yeah, it's still red. It's still red. No matter how red the market is, we still see some green candlesticks. What means that people are still making money, even in the bearish market, even in the red color market. So now I want us to discuss something that is very critical. As the stocks are going down to a bearish direction, there are some form of investments that are going up. They are showing some glimpse of light, like the money market. So I want us to have a deep conversation on the money market and how investors can take advantage of it. Now, for those that will be seeing us for the very first time, that have not heard about money market before, let's please, first of all, explain what money market is.
Money market fund is actually a basket of assets.
Yeah.
So, for example, for money market funds, you have a fund that invests in more like fixed income securities, like fixed income assets. For example, like treasury bills, like commercial papers, like short-term government securities, and all of those things. Money market actually focuses on that. So that means that you have, because most of like government treasury bills, for instance, is actually government, loaning money to the government.
Yes.
And you know government will always pay. So the downside risk is literally very low to almost zero. Then you have the commercial papers. Commercial paper is more like a corporate bond. So a company doesn't want to go to the market, to the bank to borrow. So what it does is that it borrows directly from investors. You have short-term government securities. You have what we call certificate of deposit. So all of those things constitute instruments that form a money market portfolio.
Okay, now everybody comes to the treasury.
So you bring all of this. Someone gives you like 10,000 naira. You invest maybe 2,000 naira in T-bills. You invest another 2,000 in commercial papers.
On behalf of the person.
On behalf of the person. So you are literally using it to invest in this. So, and that's why the returns are usually fairly constant.
Okay.
Yes, fairly constant. That's why we call it fixed income.
Okay.
So, for example, if the returns on that fund is usually like, maybe it could be from maybe 16 to 20 to 22%, around that range. They're usually anchored around the bonds.
Okay.
Remember, the bond yields actually define every other fixed income in the market.
Now compare it to actually choosing stocks, picking names.
No. So that's why bonds are actually called low risk assets, or money market funds actually it's low risk, whereas stocks, I mean, you are investing in the stock of a company. Like at this point, people are taking profits aggressively. So that's why you see the market going down.
But the funds are still doing
well. But the funds are still, because the funds, whether the market is going up or down, the government will still pay. The only thing is that the funds are actually determined by the inflation rate. So in high inflation environment, like what we have now,
in Nigeria,
you have the money market fund is performing.
That's why they're actually doing well.
Most money market funds do, they're doing well because of the high inflation rate.
Okay.
So currently, the one I'm doing at this point is, I think they are paying 16.72%.
Okay.
It actually fluctuated. A couple of days ago, it was 16.81%. But you can see the fluctuation is very tiny. It's like in basis points. Yeah. Whereas, like last month, the return on the NGX all share index was around 62%.
Yeah.
As I speak with you now, it has dropped by 11%. So it's now at 51%.
The gap.
The gap is insane. Large, yeah. So money market funds are for people that want to, maybe you want to invest in a project, you want to buy something, and then you just want to put your money somewhere. Let's say you have a something to buy in 6 months. Just put your money somewhere and then you cash out. Now, let's say you do 1 million naira. 1 million naira in 1 year typically should give you about 160,000. That is at 16%. Now, if you leave that 1 million naira in your bank, you might pick up 1 million naira. By the time. But remember, you're also dealing with inflation. But even if the price of the asset is 1 million, you still have your 1 million, but you see, because you have invested maybe for 1 year. If let's say you want to pay for something by next year, the price, let's say school fees, for instance, and school fees are fixed, for instance, 1 million naira next year. You can put that 1 million naira in a money market fund, and you are sure that whatever happens, whether you're in a bear or bull market, you will still have your 1 million naira intact. Capital preservation. Okay. Then by the time it comes for the time you need to pay the school fee, you can withdraw your 1 million and pay, but you have something on top of it. Okay. Whereas if you put that money in a Nigerian savings account, if you get 5,000 naira on that 1 million, you have tried. So it's for capital preservation. Whereas when it comes to do with stocks or equities, that 1 million naira can actually be 400 or 600,000. That's a 40% drop. It's very possible. Okay.
So
if you're in the
you advise a beginner to actually start from money market funds.
If you not beginner, someone that wants to come into the financial market, you can start with, I always say, ETFs. You balance your portfolio. So you have, because a beginner cannot stand to see 20% dip, 30% dip.
You will not understand.
He will lose his mind. So you can split, you can have a shared portfolio. There's something we recommend sometimes, 60-40. 60-40 is 60, that's you are still overweight on equities. So 60% in equities, 40% in money market fund. Again, it depends on the age of the beginner.
Okay.
Because a beginner that is a young person, if you come to me for advice, I would tell you, listen, do 80% equity and 20% money market fund. Why am I saying that? Even if you are investing, experience has shown, even if you are investing at the top of the bull market, you have enough time. Imagine someone that wants to, someone called me, the son is just 20, he's not even 20, he's about 19 years old. He said he wants to invest for the son. Was looking at putting away 10 million naira. So the point was, he asked me, what should I invest in? I said, do 90% equity and 10% fixed income. Now, for me, that 10% fixed income is maybe for the guy to be getting something, But now the equity portfolio, we now split it into dividend and growth. So what that tells, because he has the next, before he gets to 60, that will be 40 years. So he has a long time. Even if the market dips, it will recover over and over again. So even if he made a mistake, at the time of investment, he has a long time to recover and make some good gains. So that is it. But for someone that is in his 50s,
60s,
50s or 60s, I'll flip it. So you do more like 60 to 70% in money market fund,
fixed income,
and then 30 to 40% in equity.
Now, let's look at the different types of money market funds available that people can actually invest in, especially now, like now.
Okay, so money market funds, there are a number of them that we have that people can invest in. I picked 5 of them that are very liquid. Okay. Because it's one thing to invest in a money market fund. If it's not liquid, I need daily liquidity. That's what I mean is, if you apply to withdraw, that should settle within the day. Okay. So that for me is very important. The reason I'm saying that is, remember, money market, it was designed for people who cannot afford to if you want instant cash, if you want near instant, I should say, cash, you should be able to have access to it. So the one that I've been talking about on this, and I think I've talked about this before, when I talked about, I think we were discussing mutual funds, I talked about fixed income mutual funds. Okay. We are not talking about, because we're talking about money market funds, we are not going to talk about the equity mutual funds or even hybrid. We are talking strictly about money market funds. So we have, I think Stanbic IBTC has a money market fund. It is the largest. If you ask, I dare say, if you ask 10 investors, especially young investors, about 3 or 4 of them will tell you that in Stanbic IBTC money market fund. Yes. Stanbic IBTC money market is the largest and one of the most liquid funds. Like I told you, I consider liquidity so much. Because if I want to pay for something, I want to have my money as at the time that I need to have it. So Stanbic IBTC, and that is, of course, we have Stanbic IBTC Asset Management Limited that handles, I think we even talked about them when we talked about some of the ETFs.
Okay.
Yeah, so they have an ETF, but this one is money market funds. You can invest, and then at any time you want to pick your money, you can pick it up.
Okay.
Then now it also, because it is large, because it is liquid, it means that you can withdraw money at any time. Then the other thing is that it's present in most of the tools that we have, the apps that we talk about. Yeah. So what I see most of these apps do is that they combine. So, for example, let me give you an example of Cowrywise. Cowrywise combines AfriInvest, United Capital. They combine a number of these funds together for their stock, and then Stanbic IBTC and some of the other names that we're going to mention here. They really combine these funds together to just so that they are able to, because most of these funds have different returns. Remember, I told you short-term government securities, bonds, treasury bills, commercial papers. Now, commercial papers, of course, are traded at a premium. The returns have what we call a risk premium.
Yeah.
Because remember, commercial paper is more like a corporate bond. And then corporate bond, because it's coming from a company, is believed to be more risky than T-bills, than government securities. But they do what we call grade A corporate bonds. We have what we call grade A corporate. I think I mentioned in the last podcast. We have junk bonds, but grade A is companies that are very liquid and are able to pay or service their debt. You have the likes of some of the big names, Dangote, Cement, and all of those things. So those guys offer whatever they offer. Those big boys offer can be described as an A-grade commercial paper. Now, because of that premium, so how weighted a particular money market fund is to grade A corporate bonds determines the returns on the portfolio. If you are too weighted treasury bills, then your returns will most likely mirror treasury bills. And in all of these, of course, treasury bills offer some of the lowest returns in terms of all the fixed income assets that you can have. So, like I said, Stanbic IBTC is there. Then we have ARM.
It's number 2.
ARM, money market fund, it's number 2. And I mean, a lot of people are very familiar with ARM pensions, but they also have a money market fund.
True.
And that is one of the funds that it's also very liquid. I recommend, as you are getting, I told somebody, said, he said he got a job and he got into ARM, a pension. I said, okay, as you are doing that, why don't you, the same ARM has a money market fund, why don't you also put something aside? Because remember, you want to build wealth sometimes on your own terms.
Yeah.
Pension funds invest in a number of things, including even moderate risk assets too. I mean, Dangote refinery is coming in, and refinery listing is coming in, and Pencom has already declared that they should invest. So that's for me is a stock, whether you like it or not. So that's a high risk asset, however you look at it. So, but you can also have your wealth grow on your own terms by investing in money market funds that you can track the yield. The other challenge is if the inflation tapers and then the CBN cuts rate, the returns on money market funds will also dip too. So it's one of the things that investors have to understand because a lot of them could come into the market not understanding what actually controls the returns on money markets. So Treasury bills, commercial papers, basically is where they and then short-term government securities is what they do. Then we have Meristem. I think someone mentioned the last time we had a podcast on is it mutual funds. Yeah. Meristem also has a money market fund. I think Corey-wise also does. In their bucket of funds, they also do Meristem. Yeah, I think they use Meristem too. So basically, that one is tracking. I think returns above 16% is what you can get from there, and it is ideal for most especially for people that are trying to build wealth over time. So you could allocate your fixed income portfolio to Meristem. But I'm going to give a caveat. I don't recommend you doing just one money market fund. Okay. So some people, no matter what you think about, I would say, okay, if you can do Stanbic, you can do ARM, you can do Meristem, but at least allocate, two. At least two. Because whether you like it or not, something can happen. Something can still happen. So you want to focus on the largest, at least have something in Stanbic. Stanbic is so far the largest. And then you can have another of these funds that we're mentioning to help you. So the bank placements, commercial papers, and T-bills are basically the things that ARM invest in. That is the money market fund. Another thing is you must understand that you can rotate. You should also consider money market fund as cash equivalent. Okay. So sometimes when I say I am sitting on cash, I'm not sitting on cash in terms of in the bank. I'm sitting on cash in the funds. In these funds. So you can rotate. I'm looking at, like I told you, I believe, because I'm trying to establish some use cases that investors might find very valuable. I believe that there will be more market dislocation when two things. Number one, when the CBN makes that decision on holdcos and in the lead up to the Dangote refinery. Yeah. Why do I believe that? If that decision, which I believe is a 95% chance that is going to happen, I'm yet to see anything that's strong relation to it. Anything that the CBN says will happen, it always happens. All these, okay, let's listen to stakeholders. It's just a political. So most times you have that these things happen. So some investors have already priced in that, but I mean, if it happens, then the idea is, even though it's been priced in, but the banks will definitely go out and do fundraising. We can even see some people that are not affected, like Dangote Sugar. By the way, their rights issue is ending today, so and they're offering at 16 naira. So if for those people that have interest, the stock is trading at 73 naira. So it's more like a discount. So now, if that is approved, that means most of these banks would actually go to the market to raise funds to recapitalize their subsidiaries, especially those in insurance. Insurance, as you already know, the capital requirement is 15 billion naira. So if the insurance arm is not well capitalized, then they're most likely going to go to the market to raise funds. Okay. Now, if this happens, I expect dilution. If because of fear of dilution, investors will have to trim their positions, sell off. So I'm taking advantage of that. That's number one. Number two, people want to pool funds, liquidate some of their positions to buy Dangote. So I'm also looking. But when I say I'm sitting on cash, I'm not sitting on cash at all. If no cash in the bank, except for some emergency cases. But you put your cash in money market funds. Money market fund, you can cash out at any time. Daily liquidity is there, so you can cash out at any time. And then invest in some highly dislocated names. For example, you expect a lot of carnage. We're already seeing a lot of carnage in the banking stocks. I still expect more carnage in the banking stock down the line. So I should sit on something and then be able to invest as the price goes down. So that is it. So
for the third one,
that is it for the third. I had to mention that because of just to establish.
Very necessary.
So Chapel Hill Delman, that is the form one. Delham is Denham is one of the market funds that are very stable. They have been around for some time, and then they are also one of the A-grade, low-risk A-grade money market funds in Nigeria.
Okay.
They are well managed. They're managed by a team of very experienced people. It's one of the funds that you can allocate to. They also invest in fixed income assets like government securities, like the treasury bills and all of that. So it's particularly, you want to focus on diversify across asset managers. You don't want to be fixated on one asset manager, just in case of what we call contagion risk. I talked about that in the last podcast. Contagion risk, meaning something happens in one and then it affects the other one. Then you are sure that, okay, you have your asset somewhere. It's more like you are insuring yourself against risk, concentration risk. Even though it's like, we say it's fixed income, but fixed income does not mean that if something happens and a bank tries, or an asset management company tries to bail out its fellow subsidiary, then that means that's your fund, that's your investment that is going down the drain. Okay. So then the last one I would mention would be FBN, First Bank Quest, the First Bank FBN Money Market Fund. Of course, they are also one of the, I think they have been around for quite a while. They are very resilient. Of course, they invest in securities, government securities, they invest in T-bills, they invest in commercial papers, and they have some kind of a premium. Yeah. Of all of these, there are only two of them that are actually banks.
Yeah, it's true.
Yes, so they enjoy a very, very high liquidity. You know why? Because
they have customers.
Customer base. Customers, it's easy to do what? To market it to customers. So money market fund, it's, though, like I said before, it's still part of a subsidiary of First Holdco. And what that means is what? That if something
happens to First Holdco,
if this, what the CBN has proposed goes, then we could see.
They'll be affected.
They will be affected, but of course, I think it won't lead to anything catastrophic, because the only thing is that they will now be managed. I think they will be better managed, safe, because they will now be reporting directly to the and the risk management will be more concentrated rather than be at the whole level. So FBN, if you are if you're a customer, whether you're a customer of First Bank or you are not, you can still invest in this. In this.
Now, you talk about not actually focusing on just one money market fund.
Yes,
you can actually spread your what do you call it, your funds across two or more. Now, if you were actually to allocate resources to any of these, how will you break down your own allocation?
Okay, I would invest across
the 5 of them.
Yeah, I will invest across just to manage risk, because I mean the returns is like almost like the very close. I would do maybe 30% for Stanbic IBTC, maybe 25% for ARM, and maybe FBN I could do 15%.
Okay.
I could do Meristem 15%. Maybe I could do Chappelle 20%, and then Meristem 15%.
Okay.
Right. That is because of how liquid they are.
Okay. Now, before we actually ask you my last question, before we go, I'd like to know now what the market is now. We are seeing a bearish movement. Do you think this bearish movement will continue for a longer period of time?
So this bearish movement will at least survive this month. Now, it will survive this month. Remember, who are the leaders of the market? Who are the leaders? Financials. Industrial, that's all. Maybe telecoms. But even telecoms, who are the behemoth? It's basically Airtel Africa and MTN. So you can look at that's why when the bank was hit, you saw what happened to the All-Share Index.
Yeah.
Now, for out of the figures, most of them, we have First Holdco, we have Access Core, we have GTCO, Abi. I think those 3 out of the 5 figures are Holdcos. You know what that means? It means that investors will still be sitting on their hands to see what happens by the 9th of July. So we expect the market to still be, we don't expect a sharp rebound, The only thing that will bring some rebound would be when companies start their earnings calls, which will be from the third week to maybe to even to August.
Yeah.
But I'm also looking at the fact that in the month of August, remember, Dangote is going to list in September. People will start trimming their position on some of the high gainers, like the likes of Aradel, the likes of Seplat, the likes of even this GTCO and the rest of them. They will start trimming their position to have liquidity to participate in the Dangote. So I think this market will recover in September.
So
late, or maybe late August, September. That's when I think the market will recover, because at that point, remember, the hype around Dangote will bring a lot of interest into the stock market. You have a lot of retail participation. At this point, a lot of people's fingers have been burnt, because a lot of retailers actually jumped into the market when prices were going up, because most of them are momentum traders or momentum investors. So prices were high, and now with this correction, some of them have been badly burnt. So that enthusiasm around the market has kind of died down a bit. But when in the lead up to the Dangote refinery, a lot of people would want to be part of Dangote. I mean, I went to the bank, and everybody's talking about Dangote. So maybe late August, September, you see people. So that enthusiasm will come back to the market. And then you have people.
So it's the government policy remains.
So the government policy, remember, there is a pre-election year is usually a bit dicey, because people are like, who do you think will win the election and all of that? But at this point, sadly, we already know most likely where that direction is going. So
you spoke with the INEC chairman.
I don't quote me, please. Well, we most likely know where that direction is going to. Okay. So that means there is most likely going to be policy consistency. We have seen a ton of reforms that have been done by this administration. Especially that the finance, the economy, and all of that, especially around FX, which has actually increased margins.
FX, they've done well.
Which will actually increase margins. Someone is even predicting, though FX is back above 1,400 today, but someone is predicting 1,100, in coming months. So, but the FX has stabilized. So, if we have this continuous stabilization of FX, remember, same September, FTSE Russell, Nigeria will come back onto that list, meaning foreign investors who want to be the first to
participate.
Then you also have the S&P has re-rated Nigeria. So all of those things are happening around September. So September is going to be most likely going to be a month where we'll have some serious recoveries. But for me, for the investor, I don't believe that money is made in the bull market. Money is actually made in the bear market, because, like they say, contrarian play. Be fearful when the market is greedy, and be greedy when the market is fearful. At this time, people don't want to touch. There are some stocks that people even get into my DM and tell me, guy, I can't believe you recommended this stock. You know why? Because those stocks are not, at this point, are selling at insane discount. It's like, look at this watch. Let's say this watch is maybe about $10,000. And then you see the same watch, but somewhere along the line, that watch now sells for $5,000, and the same people that were looking for that watch at $10,000 are now scared of buying at $5,000. That's what happens. In the market, the stock market is the only market where people are scared of buying things at discount. That's just the reality. People are scared of buying things at discount. So I think this is a time for you to accumulate. Institutional players, I'm going to tell you, institutional players are actually accumulating at this time. Retail traders are afraid. They will jump back in when the market has done another, maybe another 20-30% from here. And they will jump back in. No, that's not how you do it. You invest. That's why I talked about, if you are to remove that, the fear, why don't you do dollar cost averaging? It now takes away emotion out of investing. Okay. So I think that is what investors
I think we've done justice to the conversation today. Thank you for coming.
You're welcome.
Thank you for coming. Now, it takes us time to edit this video and before you see the video. And in the stock market, things happen real time. So if you want us to have a close conversation, we have a link on our profile page where you can actually join our community and have real-time conversation with us. We do real analysis, real-time analysis with real-time fundamentals checking and research in our channel. So you can just use the link on our profile page and you get to our community, our Telegram community, and I'm waiting to see you there. Now, before we go, also do not forget to like, subscribe, and also put on the notification bell on this channel because of the amazing content. And always remember that there is a bull market everywhere in the stock market, even if it is red. And we are always here to take you to that location. My name is Providence. I'll see you again.